Good afternoon, everybody. Welcome to your Wednesday edition of the Trader Merlin Show. I think we are on the 6th of July today. Crazy volatility, and of course, as we mentioned yesterday, talking about the FOMC meeting minutes, one of the major announcements for the day, and that caused a lot of havoc out there for the equity markets, and we'll look at all that here as we progress. As I always encourage everybody, I am obviously trying to do what you guys would like to hear, so if you have questions, you can always email me. You email those in at TraderMerlin@gmail.com, or if you go to the YouTube videos, you just put them anywhere on YouTube. Awesome. It'll show up on my administration panel, so I'll see when the questions come in. And I usually build shows around your questions as they come through. So here's a program for today. I'm actually going to start things off with the question right away, which is sent in by Heather. And that will build out the first part of the show. And then later on, I'll get into what happened out there in the markets. And for Judy, she reminded me very nicely, by the way, that I forgot to mention my XLE trade yesterday. I mentioned it, but I didn't show it, so I figured I would walk back through that. So I will look at that in a little bit. But here's what I'm going to start off with is a question that came in from Heather, which was, can you walk us through your trading process? How do you pick what to trade? I think that this is a very challenging topic because every single one of us is going to have our own unique way of doing things. It's kind of like going out and buying a car. We want different things and features and functionality. It's funny, I got a friend of mine, all he wants to do is post pictures on his social media site of him and all his friends driving around in, $200,000-$300,000 sports cars, where I look at him and go, you're all being idiots. Why don't you just save that money or buy a house or invest it and make a lot more money down the road? Different strokes for different folks, right? So I'll walk you through the basics, and specifically for Heather, I'll walk you through my trading process from a long-term and from a short-term perspective, because I'm a little different than most traders out there because I trade just about every asset class. B, I trade just about every style. So I do things from short-term, very short-term day trading if I see the means. And I also do long-term investments. Of course, my long-term is going to be different than Larry's definition of long-term. For me, long-term is going to mean something that's going to last a couple days to a few weeks, maybe a few months, but I'm not a hold-on for years kind of person unless you're talking about Bitcoin and cryptocurrency, then I'll be holding those for years. So here's my wonderful graphic for today, my trading process. And again, I'm going to walk us through just the very basic high-level steps here on how, what I'm looking for, how it functions, etc. And maybe we'll walk through some examples because I do see some things setting up for tomorrow as well. So here's how we start things off. I'm going to do it from the swing and position. For those who don't know what swing or position is generally a trade that's intended to be from a swing high to a swing low, or a swing low to a swing high, meaning you're just capturing a small movement in price in the bigger picture. So that could be a couple days, maybe a couple weeks. Position is generally something that lasts much longer. So first step I'm going to do in all of this is very simple. I need to filter the market. I need to go through the thousands of different securities and weed out the stuff that I just don't want to have in my portfolio, or not my portfolio, but the risk that's associated with specific securities. So if you're starting out, what I would recommend is you go and you say, all right, I need a specific amount of liquidity. So if you're a trader that's trading any amount of size, meaning you're trading 3,000, 4,000 shares of stock, you have to have liquidity. If you, I know my swinger position, this shirt doesn't have pineapples on it if that's what you're insinuating, Bega. If you're trading big size and you try to unload those positions or buy, you're going to move the market by yourself if something is very illiquid. So for me, who used to trade much bigger size in equities, now I don't trade as big as I used to because I'm not day trading as much. But generally, I'm looking for at least 1.5 million shares traded per day on average, right? Anything less than that, two things are going to happen. Number one, the spread is going to get very wide. It'll get wider. Normally, the spread, the difference between your wholesale buying and selling price is, 1 or 2 cents. That's normal. But when you start to have low liquidity, let's say under a few 100,000 shares of liquidity, then all of a sudden those spreads turn into dimes, maybe 20 cents, 30 cents, and get real wide. So you got to be careful with thinly traded ones. Spread gets really wide, and then not only does the spread get wide, but the layers below each subsequent price level will have fewer and fewer participants. So what happens is one small block of shares can really create havoc. So volume, at least 1.5 million. Other than that, I like to have, volume is number one. Oh, and price, generally I won't trade anything under 15 bucks just because it's penny stock territory, and I just removed those. It's been an old habit I've had since the late 90s. So those are really my main two things, and you'd be surprised how much you can filter out. Now, there are a lot of platforms where you can actually import the entire list of an index and then just sort and delete the ones you don't want. So, for example, it's been a while since I updated this, but I have a list for TradeStation, which I actually still use it just for the filter. Here's the S&P 500, and I will filter it based off of those criteria, right, of price. Now, some of these may have fallen below 15, but my S&P 500 has now turned into an S&P 395. So I've removed a lot of them from the equation. I don't know why. That's interesting. Cabot Oil and Gas and Facebook are not coming up on my list, which is kind of odd. Oh, yeah, it's Meta. Dirt. I should have known. So, yeah, I remove a lot of those, just delete that, and now all of a sudden my list gets better and better. And let me, real quickly, I haven't updated this one in a while, so let me just show you, go to price, look at last. Come on. There's last. I'm just going to double-click and see if anything has gotten below 15, because then I can just delete that. So here, AIV and XRX, delete them, gone. And I don't get emotional about it, I don't care. It's just, I just want to remove stuff that brings on extra risk to me. So, that, from a filtering the market perspective, is number one. I'll go deeper into filters here in a little bit. Ocean Beach? Love Ocean Beach. So that's number one, is filter that market. Number two, identify the trend. I think this is one that most people do not do, and they go counter trend because they think something is sold off too much. The probability of being in a successful trade is so much higher if you go with the frickin' trend. And I say that condescendingly because I lost a lot of money by going counter trend trade, as you guys saw back in 2020. That huge put position I had on the S&P, that was counter trend. Of course, that was a one-off event. I was really playing the fear and pandemonium of COVID, but generally you're going to stay with whatever that trend is. So, for example, you look here at Meta, right? If you're thinking about buying Meta right now, the odds are against you. It does look like it's been trending down. Now, we could make some further revisions to this. Now, I hate to use TradeStation, but here we are. If you look at this last little area of consolidation you've seen in Facebook, you know, it's been stuck in this little yellow box right here. So if you are thinking of buying it, well, I wouldn't buy it right now. I'd wait for it to tell you it's going to get out of this range, or just stay out of it, right? So there's your parameter setting up for that trade. That makes it easy and unemotional. I mean, I think the key is to remove your emotions from the discussion so you don't do stupid crap. Number two was identify the trend. So if it's in an uptrend, my bias is going to be looking for pullbacks into demand. If it's in a downtrend, I'm looking for pullbacks into supply. Just like on this Facebook, I would be looking for pullbacks into supply, looking for shorting opportunities. Look at something like Dollar Tree. All right, Dollar Tree. Well, not probably the best example. It's got a lot of chop going on right now, but it's been in an uptrend except for this one weird little blip here back in May. You know, right now you have a pullback into an area of supply. I mean, this might actually be a great shorting opportunity for tomorrow for some of you on decent volume. Next on my list, and if you have questions, type them in. I'll get to them as we go. Identify supply and demand zones. This is probably, I couldn't really figure out what to make his most important step here, but obviously I need to filter out the market so I don't look at stuff that's wasting my time that I wouldn't trade anyway. Number two, find what that trend is, and then in that trend, start mapping out where are those key points where I feel like price is going to turn. Now, we never know for a fact where things are going to turn. It just would be impossible, and anybody who says that they do is flat out lying. But there are some areas where we can look at and increase our probability of success based off of what happened in the past. For those of you who are Online Trading Academy graduates, you have a whole list of odds enhancers. Now, running through, let's say 10, well, the 10 is the basis, but there's more for different asset classes. Taking your time to run through those 10 odds enhancers can take some time. I mean, at the beginning when you're starting out, it's like, okay, I got to spend time to go through each one of these, and you feel like you're wasting time. I disagree with that. I think what you're doing is you're setting up your routine and going through each one and saying, does it meet this criteria? What's the score? Okay, great. Does it meet this one? What's the score? And ultimately, you start to look at a trade unemotionally and don't get attached to it. It's just simply a numbers game. If you have a high odds enhancer score, something's trending in the right direction, you're going with the trend, you found a nice demand zone. What does that demand zone rate out to be? What does it look like, right? That's the simplest way to do it with odds enhancers that we teach in Online Trading Academy. Next, number 4. This one is my personal tweak on this. I love extremes. I love panic. I love chaos. I love euphoria in the financial markets. It is one of my favorite things to look for. I love panic. The more, the better. When people are screaming and running for the exits, that's when you're like, here, let me hold the door for you. Enjoy your way out. I mean, it's awesome. I love when you look at a chart, and okay, this sounds horrible, obviously, in light of all the events that have been going on recently, but in the financial markets, exclusively in the financial markets, I love watching people scream on the price charts. And you can see them screaming, right? You look at some of the commodities charts recently, they were just plummeting. Here's XLE, right? You've had these really big sell-offs here. These are people screaming in agony in financial markets. And this is where, as traders, we step up and we become a humanitarian, right? We step up and we say, I understand that you're in pain. Your position might be down 30, 40, 50%. Tell you what, I'm going to help you out today. I will buy those shares because I know you're hurting. I know you're in pain. I will take that off of your hands to make you feel better. Give him a little pat in the back, maybe give him a nice little hug, right? But also, most of the time what happens is people, retail people, are selling right into an area of demand. And you're like, okay, well, you just don't know what you're doing. So I will gladly sit out there and buy those shares from you. To me, I know Mimi's like, oh, I'm deleting this channel. Merlin's rude. No, I'm saying only in the financial markets we need panic. We need calm and peace and love going to the rest of the world. But in the trading world, you know, it's a war zone. It absolutely is a war zone. And if you're new to trading, you'll find out very soon that it is a war zone on a daily basis. So I look for extremes, and there's a couple real easy things that I do for that. So let's say, for example, I found something that's an uptrend. I found prices pulled back into a demand zone. That's one criteria, and I'm actually happy to make that specific trade. But if I find something that's extremely oversold with climactic volume, really high volume, and maybe it's even outside a Bollinger Band or something like that, oh, then the trade really has some legs for me. Let me see if I can find some examples of some of these right now. Let's go look at, what do you want to look at? How about, we looked at Dollar Tree, which wasn't great. How about Philip Morris? Okay, so you look at Philip Morris right now, and you have a situation where it's been trending down, right? Not aggressively. I would argue that this is actually a head and shoulders pattern. And you have this huge pain day today. How do I know it's pain? First off, look at the size of the candle. Number two, look at the volume. Its average daily volume for the past, what is this average volume? 50 days has been about 5.5 million. We traded 8.1 million today, much higher than normal spike. That was people freaking out. Now, I don't think that's the end for Philip Morris. I think that it probably has more downside move. But do I see a good demand zone over here? And the answer is no. I really don't see anything where it looks like it's got a great probability of turning. So even though this came up on one of my filters as being oversold, right, outside the lower Bollinger Band, well, it doesn't quite make trade criteria for me. How about KSS? Right, here's another one that's, you want to talk about fear? Retail, right? A lot of people freaking out about retail. Look at this price chart. I mean, Kohl's was up right around 65 bucks. Now you're teetering at 27. A couple days ago on their earnings, you had massive jump down in price and a huge spike in volume, still well above average today. So all I'm doing in this example, if I'm thinking of potentially buying here and going counter trend, I got to make sure this lines up to something that's a strong demand zone. And in this case, I don't see anything on Kohl's either. Can you show us how to use Bollinger %B? Sure. It's actually in a variety of different platforms. You can put it on most platforms. But yeah, I'll show you that one. So that I do this every day. I have this little %B here, and you notice that there's only two. Kohl's and Philip Morris were oversold and outside the lower Bollinger Band. And again, I want to make this clear just for everybody, Frank and everyone. The Bollinger is not what makes the trade. The trade is, what's the trend doing? Are we coming back into an area of demand or supply? And then if I can find an extreme, something that's really overdone into those zones, that makes it even better. Okay, so you want to Bollinger %B. So what I've done here on TradeStation is you can add in Bollinger %B. You would simply right mouse click on your headers, all right, and you go insert analysis technique, and then this little window will pop up and you can go into Bollinger %B. All right, it's up near the top. So that's how you would do it in TradeStation. If you go to TradingView, you can go to your columns up here. I haven't done this in a while. Settings, customize columns. Yeah, I forget how you do it, but I have done it in here. You can add in Bollinger %B. They call it Bollinger B, but I don't remember how actually to do that in here. I don't use TradingView very much for that. Where was that? Import list, customize. I'll have to figure out how to do that one, but if you go in here and go to like insert indicator, you'll notice that there's one in there called Bollinger Bands %B. So this makes it a little bit harder. It's just basically showing, is it above or below? Right now it's outside the lower Bollinger Band. So Bollinger Bands on this indicator should be between 0 and 1. Right? Anything outside the upper is considered overbought. Anything down below the lower is oversold. So if you have oversold on Bollinger %B right into an area of demand, great. And you should be able to apply this into your filter screen here, but I'm not sure why I couldn't get it to do that. Okay, so that's how I would do that one. And again, it depends on your platform if they'll allow you to add in Bollinger %B. If you don't have Bollinger %B, you can just add in Bollinger into your watch list. And if anything is, over 100, fine. If it's below 100, fine as well. Is that like RSI? It's similar. So Bollinger, the two different calculations. So RSI basically says, let me analyze this security and how strong is it right now compared to what it has done over the past 14 bars. That's what RSI does. So Bollinger says, let me average the last period of time, depending on what time frame of Bollinger you use. A lot of people like to use 20. I think it's the default. And it says, let's take the average there and then basically just apply statistics and say, give me 2 standard deviations above. So theoretically, I believe 96 or 98% of all the data should fall within 2 standard deviations. So it takes 20 bars, calculates that out and says, give me 2 standard deviations from the average of that. Really creates a 20-period moving average and does 2 standard deviations. So you can see these envelopes of price. So as things get really condensed, it's a sign of compression, and then you'll likely see explosion in the future. Or when you get really wide Bollinger Bands, that's a sign that things have gotten chaotic, and they'll usually calm back down. Reversion to the mean, kind of. That's the gist of it. But we won't go too in depth on the indicators session here. All right, so we've gone through 4 pieces so far. I got to filter that market, get rid of all the crap I don't want to trade. I got to find out what that trend is. I may even put this as number 1 because I think that the trend is the most important part. Identify those supply and demand zones. Make sure that you have your strategy. I know there's a lot of different ways to draw them. That's fine. Just have your rules that you follow and modify as needed over time. Identify those extremes. And lastly, oops, I got the wrong screen set up. There you go. This is where I need to hit the arrow down button. Calculate risk. So for all of them, you notice that this is the only 5 things I do. I'm not thinking of how much money I can make. There's nothing in here that says how much you can make, right? The only thing that really says anything from a specific trade perspective is calculate my risk. So when I'm making any trade, whether that's a swing trade, position trade, or even a day trade, I have to immediately look at that picture and say, if I buy here and I get out at this price, how much am I losing? That's the only thing that matters to me, is how much I will lose on that specific trade. Winning, as I've mentioned many times, or making money is a byproduct of not losing it. So I don't care about making money. Just don't even think about it. Will happen organically as long as you don't lose big. All right, it's hard to change your mindset that way, and I know a lot of people might struggle with that. But forget about making money. If you just don't lose it, you will make money over time organically, as long as you lose very little. I think Bob Dunn, Bill Addis was on about a week or 2 ago. Time flies. But Bob Dunn even posts out there. He says, I'm happy to take a ton of little losses in exchange for a couple monster winners. And that's his strategy, and I think it's a very good one. The ratio at which our win to loss is somewhat important. But you could tell me, I'm 50% profitable on my trades. Okay. Well, that doesn't tell me whether you're winning or losing, right? There's 2 variables that go into play. It's what's your win-loss percentage, right? Now, you take 10 trades, how many of those are you winning on, how many of those are you losing on? That will help me determine. But more importantly, what's your average reward to risk ratio, right? Generally, you want those risks to be very small and your rewards to be much larger, and therefore calculating out risk becomes extremely important. Winning isn't everything, it's the only thing. I would say winning isn't anything at all. Winning isn't anything at all. Winning is just doing what you're supposed to do, right? If you drove down to the market, if you drove from, you guys all have a local store, right? So let's say you're at home and you drive to your local store and you get there and you come home and everything's fine. Do you tell your wife or your girlfriend or your kids, great trip to the store, dude, it was awesome? You don't say anything. You just do what you're supposed to do, so shut up about it. Who cares? But if you went to that store and you got in an accident, telling everybody, right? Because that shouldn't happen. That to me is trading in a nutshell. Go to the store, do your average thing. That's a winning trade. Who cares, right? Unless something extraordinary happens, then maybe you'll talk about it. But for the most part, trading is not about making money. Change your mindset and you'll change your results. I can't say promise or guarantee anything, but it will certainly enhance your probability of success by forgetting about how much money you want to make. All right. Oh, I definitely think what Larry's saying here, winning is a state of mind. I definitely think you have to put yourself in that attitude. Yes, one thing that I'm not putting in here is the psychological aspects, right? In anything we do, we should have a positive mindset. Always thinking that I can do this. I am going to do this. And if we struggle, which everybody will in every aspect, you have to figure out why you're struggling, right? Obviously, I struggled playing basketball. I realized it's because I'm 5'8" and 140 pounds. I was not even remotely close to being a basketball player. So, figured, hey, I'll play baseball. Know your strong suits. Some things we can't fix. I'm not going to stretch myself out to be 7 feet tall, but I'll find something else that I'm good at. In trading, the good news is we can always find some other market segment or asset class which we can apply a set of rules to, which might be more comfortable for us. So I definitely think you have to go into it with an attitude of, I'm going to do this. If you are thinking that you're not going to do this, if you're scared and you think I'm going to fail or what if I fail, then you're probably going to lose. I hate to say it. You cannot have a defeatist mindset in this. If you're going up to you see a handsome, attractive individual you'd like to talk to at the local watering hole, and you say, they're just going to say no or not going to talk to me or reject me, well, you already lost. So don't do that. Go in there with confidence, especially for those of you who have taken structured classes like Online Trading Academy. You know the rules. You have a specific set of skills that's designed to increase that confidence and that probability of being on the right side of the trade. And yeah, it's not going to work all the time, but it should give you enough confidence to modify, revise, and get better over time. So great, good comment there. That is Muggsy Bogues. Yes, that's true. That's true, Michael. Muggsy Bogues. Apparently that guy dunked. He was like 5'4", and the guy could dunk. Unbelievable. And spud away. Okay, yeah. Okay, just to say I lack the manual dexterity for basketball. I never could be for some reason that was never my game. But baseball, I could do. I actually could do football too, but one good hit, and I'm a broken pretzel on the field. It would never work. No problem, Linda, and thank you for your comments and participation. Always a pleasure. Let's see. NJ, I'll get to, let's just do LLY now. Just with the things we just covered, let's look at it from this perspective. NJ said, what about Eli Lilly, LLY? So I'm going to run through these 5 things here real quick. And Eli Lilly does make the number 1, which is volume. So let's just put LLY on the chart. And I will share that with you guys. And let's hide some stuff here. Just make sure my volume is good on this bad boy. I don't want that. I don't need %B. Your average volume, yeah, you're well over 1.5, so it's good. All right, so just to apply what we did here for NJ, is you have Eli Lilly. Number 1 was filter the market. Check, we've done that. Number 2 said identify the trend. Well, unless you are doing a handstand right now or are on some serious hallucinogenics, this is an uptrend. There's no argument. Anybody tells me this is not an uptrend, I would love to hear why. We can be very calm and peaceful about our discussion, but I'm pretty sure you're going to be wrong. Eli Lilly, beautiful uptrend. Great, so we got the uptrend. What am I looking for? Am I looking for supply zones and I'm looking for demand zones? At this point with Eli Lilly, I'm really waiting for pullbacks, right? I want to make sure that this pullbacks, and I'm not going to do the full supply and demand zone analysis. I'll keep that light. But, you have some points here where you might be interested in looking at buying into this current uptrend. 317, maybe 290. I know some of you want to look at that whole number like 300. The other side of this is I have to look back to the weekly to find any levels of supply. As a matter of fact, I'm never going to find any supply. So you can't think about shorting Eli Lilly. There's no level to go off of. So really, I can only be one directional. I just have to be buying into this trend on Eli Lilly. So with this picture, we look through our first 3 things. Now I need to map out those supply and demand zones, and I have no extremes right now. All right, but let's say, for example, we decided to use this demand zone. We'll make it a wide zone, right? We can modify it using other tools, but let's say this is your demand zone in yellow. If all of a sudden we have a huge sell-off here and volume spikes and it comes right down to this 290 mark or somewhere in that range, I'm interested in joining the trend. I'm interested in buying it there, right? And moving and joining that trend to the upside. The other thing that I could do is, let's say I was looking to buy if it hit 290, right? You can see that red line on the bottom there. Well, depending on the asset class, I may not want to shell out $290 per share for Eli Lilly. Maybe what I'll do is I will sell some puts here at 290, collect some premium, so if it does get here, well, great. I'll buy it at an even cheaper price. If it doesn't get there, I collect premium anyway. So this is a lot of what I will do is I'm looking at specific zones and saying, all right, I will sell some puts if it gets those levels and collect some premium. And if it doesn't get there, who cares? I made some premium along the way. Michael says, with LLY, are you of the opinion that strong stocks like Eli Lilly making new highs and the market at lows, will it be a market leader in the months to come? I don't necessarily look at that. I would say I've made a lot of mistakes anticipating what might be the market leader in 3 months or 6 months or a year. It's just there's so many variables. I'm more of the mindset of, if this is on an uptrend, for whatever reason, market could be just absolutely cratering right now. Something's going on with Eli Lilly. I don't know what it is. And I'll be honest, I'm not going to take the time to go out and look at all the headlines. I'm not going to take the time to listen to Jim Cramer's analysis on Eli Lilly or anything like that. I just want to look at price, because now I've removed all my emotions. If I read a headline or a Bloomberg article or heaven forbid, try to torture myself while watching Jim Cramer every day, I'm going to get put into things because I'm emotional. Jim Cramer says, buy. Oh, God, I got to buy it. No. Most of the stuff he recommends fails. It's ridiculous. He's a laughingstock of traders. Retail people love him, and they think he's great. But the actual traders in the world just shake their heads at what Jim Cramer does on a daily basis and how he gets away with it. It blows my mind. So I don't particularly care. I mean, look, our markets look really weak right now. We can make all the arguments in the world on why Eli Lilly should sell off. Doesn't matter what your argument is, right? What matters is Eli Lilly is trending very strong. Now, I'm not going to buy it at 330 at this all-time high, but if it pulls back, I'd be okay joining that trend. And it's real simple. If I'm wrong, well, I'll just simply get out, and then I might actually start thinking about shorting it, because for me to be wrong, it would start making new lows, and there we might have the start of a new downtrend. That make sense, Michael? Algebra says, my confidence got destroyed on multiple losing streaks, like 10 losses in a row or something. I'm like, no short time frame trading again. Yeah, short-term time trading is difficult. I've mentioned this in the past. It was a struggle for me early on. I think, personally, one of the best ways for people to start trading is start off swing, right? Your trade should last a couple of weeks. That way you're not constantly getting in and getting out. You have a little more flexibility with time. When you do swing trading, generally your stop losses are going to be a little bit wider than day trading, but you're not glued to your screen all the time. You can use set and forget orders or OCOs or bracket orders. I think that is the best way to start. And then if you do feel comfortable, take a small amount of capital and start day trading if you like. But day trading's tough. Day trading is a very hard profession. You're constantly bombarded with over-information and forcing trades to happen. Kramer said today it's time for crypto. Oh, great. Did you say it's time for? I thought he said it was that it had no use. I thought he said actually something worse. He says it went from 3 trillion to 1 trillion. Who's to say it's not going to go down to 100 million or something like that? It sounds to me like he was actually being bearish on it, which would mean it's probably going to rally, right? He's the ultimate contrarian indicator. If I had more time, I would track every single one of his trades just to see the results. I used to have an inverse Kramer portfolio. Didn't do very well. CNBC higher in production value. Question on value is any? Yep. Yeah, they great production. It's just, I don't know. Get me a show on CNBC. Let's make it happen. All right, so that's swing in position. And I know that many of you are like, well, where's all the details? Why isn't there much more to it? There shouldn't be more to it. Your trading should be very simple. One of my old colleagues used to say, trading at its most difficult should be boring, because you just have your rules and your plan in place, and you don't torture yourself with emotions and psychological damage. All right, that's swing in position. If you got questions, type them in. I'm going to go to the next one. which goes to short-term day trading. This is where I cut my proverbial teeth, if you will, doing way too many trades in the past, and I learned a lot from it. I actually think it was probably a great experience. One of my greatest trading experiences is making hundreds of trades per day. I became one of the fastest keyboard traders you'll ever meet, right? I knew certain securities inside and out. Like, I was a market maker in essence. I was trading more than actual market makers were. It's challenging because it cost me a lot of money. I mean, at the end of the day, you're like, oh, great, I made 10 grand today, and you go back and you look at your P&L, it's like, well, how did I make only $500? Yeah, because you spent $9,500 in commissions. Oh, the owner of that floor loved me. All right, so let me just walk through the things that I would look at from a day trading perspective. It's actually a bit simpler. Number one is I'm scanning the market before it opens for opportunities. I'm looking for breakouts. I'm looking for candles. I'm looking for, pattern formations. And there's a wide range of places that you could do that. So let me show you a couple here. These actually came up on my radar for tonight. So I generally run it in the evening. And if I have time and wake up early in the morning, I will look them up. But here's FMC. Take a peek at what's going on at FMC. Now, the only thing that I'm not really big on FMC is its volume is somewhat low, right? It looks to be just around 1 million, which is kind of a problem, right? That's a little thin, so I'm not going to trade big share size of this. Do I know what FMC Corporation does? No, I do not. Do I care? Not really. As long as they're not a biotech or drug stock, I don't care. So look at the formation today. Giant hammer, long bottoming tail. It's at the bottom of a 5-day downtrend. It breached this little area of demand that was there and then ripped back up. It's like a bear trap, and you have a hammer formation on higher than normal volume. I'll put volume back on so you guys can see it, right? Volume today looks almost double what its normal average daily volume is. Okay, great. So this is one I look at and I go, I might like this one for tomorrow. And my rules are very simple with regards to this, right? You simply map out what the high was for today. And there you can see it was $104.49. So I would say if this breaks, it has to open up tomorrow somewhere below 104.50. And then if it opens up below 104.50 and moves above it, that's my cue to buy long because the momentum is there. And that's as simple as I'm going to make it. That's one that's on my radar for tomorrow. Another hammer formation was on this is a shooting star. So notice this one. You've got a beautiful downtrend. Gorgeous downtrend on this bad boy. This is Agilent Technologies. And it's now had a retracement right up into this previous sell-off point. So you could argue that this is an area of supply. It's rallied back up there. It has a shooting star formation, which is the opposite of a hammer. So that's another big one. I love this pattern right here. The only thing that makes me suspect on this one, volume is not very high. It's still escalating, but notice what's happened most recently with the lows. It's actually starting to make a slightly higher low. So this feels like it's actually getting a little bit of strength. Again, I would trade this the same way. I'd put a line right across the low of today. If it opens up above 120.56, great. If it opens up there and starts to sell off below 120.56, shorting opportunity, go for it. Stop loss is going to be above that tail, which should put us right around here, which means I've got about $1.80 risk per share on this one. So if I only have a $200 stop loss, well, you're going to trade 110 shares or something like that. Simple, easy, and all I am doing is looking for filters. If you want filters, you can use things like Stock Fetcher. That's an easy one. You don't need to pay for this. How much time have I got? Okay. You go in here and you can see if you want to see stuff, the 13 and 50 period bullish crossovers, great. You want to look at things crossing Bollinger Bands or all kinds of different channels and price actions. Like let's just see what they have as hammer formations. Let's see what we've got on this one. So what I'm going to do is view the full results. So there it is. And again, you notice there's problems here. It has price, I need it to be above 15. Let's just do above 1 million shares average. I think that's 1 million. Yes, 1 million. And we fetch the stocks. So right now, these are the patterns that they're saying have a hammer formation. Actually, it's as of yesterday. So we may have to run this one later tonight. Right? I'll have to probably run this later because you can see that the hammers that they're showing were all yesterday. And it doesn't look like any of them really followed through because, it started off as not the strongest day. But anyway, that's one site you can use. Another one you can use for patterns is going to be FinViz. And again, this is all if you don't have it in your trading platforms. Some of you have all these filters and scanners in your trading platforms, but I'm trying to show people free stuff because I know a lot of you may not be using a robust platform or looking for other solutions. So here you have in FinViz, right on the front page, you can see here a bunch of different patterns. Ascending triangles, descending triangles, wedges, double tops, double bottoms, head and shoulders. You know, these are all very good free scans, but you have to look at the price pattern, right? A descending triangle. Well, this one here doesn't count. I'm not caring for a descending triangle trading at $1.78. Nonsense to me. The only one that actually looks technically perfect as a descending triangle is this one here on VSTM, right? Looks great. It's $1.18. What am I going to do with that? I can't do anything with that. Noose, NUS. All right, looking a little bit better. You can see that's got this, the peaks are getting lower and lower. It's baselining right on that little blue line, even though it did break it in the past. This might be a trading opportunity as well. But anyway, just showing you some options out here. Here's Circle Trader. Okay. I'm sure that was. Just showing you some options and where you might be able to find some of these resources that are free. I'm a big fan of free. So that was number one, was just simply I'm scanning that market. I'll do it either like tonight or tomorrow morning, but I'll be honest, I don't really like getting up that early in the morning anymore. I'm nocturnal, so hasn't been making a ton of morning day trades. The other side of this is map out supply and demand zones. So again, supply and demand, and my routine for supply and demand is uniform regardless whether I'm looking at a 5-minute chart for day trading or a daily chart for my swing and position trading. And then third one is just simply assess risk. I'm going out there and I'm saying, how much am I risking on the specific trade? As you know, if I'm doing a swing trade or position, I might just be trading, let's say, 300 or 400 shares. If I'm doing a day trade with pure equities, I might need to be trading, a couple thousand shares. So I'm trading bigger blocks, making smaller profits. If I'm doing swing, I'm trading smaller blocks, bigger stop losses or profit targets. So those kind of balance out. It's just one of those things you got to pay attention to in those different trading styles. So that I would say is kind of the fundamentals of looking at the underliers. These rules I go through for swing and position and day trading, in my opinion, are the universal, whether you're trading futures, cryptocurrencies, forex, equities, whatever. Options is a bit different, right? So options, I'm setting up the trade using those rules. So let's go and look at what happened with XLE. So Judy, I hope that you're here today because let me make sure I give you a nice little shout out. Judy sent this question in. Hi Merlin, you mentioned that you sold options on XLE and SLV today. Can you share those trades? Yeah, I was supposed to do that yesterday and I completely forgot. I got too wrapped up in conversation. I forgot, guys. Sorry. So I'll start off with SLV. SLV, I'm just... as crazy as silver has been, it's just absolutely tanking. So I sold the 1750 puts and collected about 1.5% premium for 10 days. I was 9 or 10 days out. I have the July 15th, and it's it hit it today. Our low price here intraday was 1748. So I don't know. I might actually get exercised on this one. I think that commodities have tanked, especially metals have tanked quite a bit. But remember that dollar has been absolutely soaring. So this is putting more and more pressure on silver and gold and all the other commodities we looked at the other day. So that play for me was very simple. That was not based off of a supply and demand situation. Let me just zoom out here. All right. And you notice there really isn't any strong supply or demand zone here on silver. What that was based off of was I actually wanted to buy some silver, and I realized I got a nice rate of return. I got a nice premium on my silver for just a few days. So this was more of, I want silver, I'm okay if I get it, and give me that premium. And just over 1% premium for 10 days is pretty freaking awesome. Why? Because people were freaking out yesterday. I mentioned that I love panic. Well, look at yesterday's price action for silver. I had some volume in here. Volume was definitely a little higher, but it wasn't the chaos moment. So that's the only negative part. But I'm happy owning silver at 1750. Now, XLE is a bit different. This also was a chaotic pain moment, right? Everybody knows yesterday, or basically the last couple of weeks have just been absolutely brutal for energy. Fine. So I have this $63 mark out here, which to me is really, there's a couple of spots I like for XLE and energy. Number one is if you notice right around 65.50, that was the area I would have liked to have sold the puts at, right? So I sold puts on XLE. And I would like to have gone 65, but it already hit that. It's already been down to that level. So to me, if there was some demand there, it's been eaten up a little bit. So I just went deeper into it. And I saw the 63s. Again, I got a very good rate of return. Because of the panic yesterday, I managed to get about 1.4% rate of return for 9 days as well. You do have higher than normal volume. Is there a rate of return on option Station Pro? I don't know. If there is, I don't use that, Michael. Yeah, I'm sure it could calculate out, but I just do it in my head. I'm a math person, so I love doing the little math in my head and saying. My target is, as I told you, to get at least 1% per month. But in this case, I'm getting 1%, over 1% for under 10 days, right? And the reason for that is fear, people panicking a little bit, which is great. Does energy fall all the way down to 63 in the next 10 days? Well, if we go from where I sold these options, which is right down to the low, and we're right around $69, is it going to fall another 8.6% by next week? It certainly could. It certainly could, but I think that the odds are fairly slim on that. I think it's already tanked quite a bit, but I'm not too concerned about it. So, Judy, that's the trade there. Predominantly, this was a zone where I'd be happy owning. XLE was at 63. Now, am I saying for the next 10 years? No. This would be, if I did get exercise at 63, I'd reevaluate. I may dump it right away, or I may start selling calls against that to generate more premium. But that was the trade that I put on yesterday. There were two, XLE and SLV. I actually was looking at some of the financials as well. But I just decided not to pull the trigger on the financials. It just didn't fit my criteria. It didn't work out well for me. Rahman, reason for crude correction below 100 when JP Morgan says it can go to 300. Well, one thing that the mainstream media does will always be coming up with an excuse or pointing the finger and saying, well, it's doing this because of this. It's doing this because of that. I think that part of the reason why you're seeing crude oil tank, let's go up to this again. Where's my CL? Right, so you had crude oil today breached that 97.50, which I think is an interesting mark. It's kind of it's struggled there in the past. Now, go to the lows here for the most recent. The most interesting points right around 93.64. Raman, you said JP Morgan saying it can go to 300. I don't care what JP Morgan says. If JP Morgan tells you it can go to 300, I actually think it's going down. They're trying to get someone to buy it, right? They're trying to find someone to buy the security, and they use their power, their influence, their sway, their appearances on CNBC and Fox and Bloomberg. They use those analysts to go out there and pump up a security so they can unload it. My guess is that JP Morgan's probably getting their ass handed to them on crude oil right now. And like, crap, we need to pop this thing up. Hey, Calvin, I need you to go on CNBC tomorrow. Yeah, call Jim Cramer. Tell him you want to come on the show tomorrow and really bullish comments on crude oil. Okay, great, thanks. That's what goes on. No problem, Tom. Hope you have a great remainder of your evening. Yeah, I'm going to wrap up here soon. I got a couple different questions, but I never trust the institutions. And, it's weird. When I was in college, when I was working with a financial planning firm, I believed all that stuff. I used that as my roadmap. Oh, yeah, Goldman's saying this is good, and JP Morgan says this is bad. Great. Sell the bad stuff, buy the good stuff. And you're like, well, how am I always freaking losing money? Because those people are trying to sway your opinions and there's always a vested interest. Do you think that JP Morgan, let me see if I can do a real poll. Bear with me as I type this in. What is more important for JP Morgan? Okay, and I'll do number one, customer profit. Sorry, my spelling is off. It's my spelling is very off, so I apologize. But here's a poll for everybody. All right, let me know what you guys think of this one. I hope the typos wasn't too bad. What is more important for JP Morgan? Customer profits or their profits? If you look at the grand scheme of things, if anybody here is believing everything that comes out of the financial markets and the institutions, then you're going to say, oh, the customer is the most important piece, right? Oh, customers are the most important. That's bullshit. It is 100% their profits. If the customers make money, great. But, in many cases, if you look at your investment accounts, if anybody here is working with a financial advisor, let's say you look at the end of the year and you're like, man, the S&P's up 25%. And you look at your account and you go, well, I'm only up 18. Well, 7% of that disappeared with fees and management fees, et cetera, et cetera, et cetera. And you may even be in some investments that underperform the market because they were looking for you. Yeah, exactly. I'll love you in the morning. Anyway, sorry, that was a rant on my part. But that was a good question, Raman. I don't care what JP Morgan says. I stopped watching the media. 100% of you that voted said that they're interested in their profits. You all know it. So you kind of have to take anything they say with a grain of salt. Now, to Raman's point, so I see Raman, I do like to hear that stuff because what it allows me to do is I immediately start formulating an inverse opinion. So if JP Morgan is telling me that they think crude oil is going to go to 300, I'm already starting to form a bearish bias because I think that they're trapped. I think they're trying to create an impression of something. So I can now go out there and start building a position potentially short, right? And just trade off that. And again, as long as I put my stop losses in there, I'll be okay. Les and NJ, you had good questions, but I'm going to get to those tomorrow. Because Linda is here and she's not here every day, I'm going to real quickly read this answer, or read this one because I think it's a good one. Do you think the feds will finally regulate the crypto chain in the upcoming months? So it's not a crypto chain. Do you think they'll regulate cryptocurrencies and digital assets? Remember, there's many of different blockchains out there. I'm confident about Voyager recuperating. I'm not. They just filed for Chapter 11 today. They just filed Chapter 11. It's not looking good. However, what's your take on their trading pause? So, two things. No, I do not think that you're going to see government regulate crypto this year. It's too big. It's a slow-moving cruise ship. So, next year, absolutely. I think by the end of next year, we will have a pretty clear framework of what crypto can do, how they do it, when they do it, where they do it, and it'll make everybody more confident. They'll also go after companies like Voyager and Celsius and Nexo and Crypto.com for their practices and have some regulations there, which will allow us to feel more confident. Right now, you look at the main three lenders out there, Celsius, BlockFi, and Voyager, all kaput. Now, Celsius I have the most faith in because for some reason they're getting a ton of funding from somewhere and their liquidation price used to be like $18,000 for Bitcoin, meaning they're bankrupt. Now it's down to like $5,000. So really good news for anybody with a Celsius account. Voyager filed Chapter 11 today, issued a long email that was basically like, oh, we're really sorry about that. And I'm like, say that to my face. Not looking good. So I'm pretty much going to write off the amount that I have at Voyager. Thank goodness you guys listened to my comments. And so I know some of you yesterday were mentioning that you pulled out your money from Voyager as soon as you heard that. Awesome. I'm happy for you. I got most of mine off, but I still have, I think about $30,000 there, which it stings. But I think my odds of getting any money out of Voyager are probably like I would put in 10%. 90% that money's gone. If I do get something, it'll be a hey yay to me, but I pretty much think that's gone. I think now Celsius, I would say, is probably like a 65% chance I'll get my money out of Celsius. Merlin, what does it mean when they are blocking withdrawals? You can't get your money. Correct. You can't get your money out. Now, what's funny is you can still deposit your cryptocurrency in these firms. People, don't do that. Don't deposit anything in there. It's like you're putting money into a hole that goes right in the middle of the ocean. You're like, oh, it's gone. Yeah, you can't get your money out. They can freeze the withdrawals because they become illiquid and they need those assets to remain solvent. So unfortunately, it's a horrible situation for the firms to be in and anybody who's holding assets there. Yep. I know, Linda. So me too. Trust me, I don't want to lose that kind of money. Coinbase got downgraded. Coinbase, I talk about this quite a bit. I think Coinbase is the biggest unknown in the crypto world. I believe that they're going to ultimately survive and do well. But look, we've got this descending triangle. We drew this a few weeks ago. Last week we drew this one. Descending triangle on it. I mean, it looks like Coinbase is going lower and lower. And if they default, if they go into bankruptcy like some of these other crypto firms, that'll bring crypto down even further. So unfortunately, I think that there's still more downside move in crypto. I think there's quite a bit. You notice today, where's my Bitcoin? Bitcoin seems to be kind of stalling and floundering here a little bit, but a lot of these companies like Voyager and Celsius have just been absolutely slaughtered because there's a worry that some of them may disappear. And GD, it may not be 100% gone. if they can come out of bankruptcy, and basically what it is it's to restructure their debt, right? That's the main reason. These are, in a sense, it's kind of like, a bank filing for bankruptcy and having their customer accounts. Well, in theory, the customer account shouldn't be used in that bankruptcy because that's FDIC protected. These investments with Voyager and Celsius are not FDIC protected, so those assets may be sold to help in the liquidation process, and hopefully it won't. Merlin, I say Bitcoin went back to 8K. 10,000 is my target. I think we had someone in here who was looking at Binance, and they actually had an 8,200 print on it. That could very well happen. It's not that out of the ordinary. If you look how far I have to go back to find 8,200, it's only back to 2020. I mean, it's not like you're going back that far. Literally 2 years ago, Bitcoin was down around 8,000. So actually, you go back 2 years ago, it was down at 4,000. So pullback expected, right? At some point, we'll have to get some traction. I think regulation will be what brings people back into the industry and makes things look better. So, Linda, thank you for the question. Sorry for the disappointing outlook on it, but I call it like I see it. Unfortunately, some of that cryptocurrency I hope to get back, but I pretty much think it's gone, at least on those exchanges. So right now what I'm doing is pulling everything off into cold storage, keeping it in cold storage, and ultimately when there is some protection or some clarity on all this, I'll deploy that capital and start earning some yield again. All right, let's go into what's going on. Then who will we buy it from? Well, you wouldn't normally buy it from Celsius or Voyager either. You would buy it from, your Binance, your Coinbase. I don't think Coinbase is going to go under, but you're hearing more and more chatter about that. At some point, I may look at buying some Coinbase, but I need to wait. I'm not going to jump in that right now. I think it's too risky. Here's what's cooking for tomorrow. Let's just run through this real quick. Obviously, some of the big news today was, and I think NJ, you asked me about this, was Jerome Powell's the meeting minutes, right? We had a big pop in expectations. As soon as those meeting minutes came out, 11 a.m. Pacific time, 2 p.m. Eastern Standard Time, you guys saw the market just go crazy and then ripped up. The reason for that was in there, the talk track is pretty much saying 50 basis points for the July meeting, maybe 75. And what I want you guys to see here, this is the FOMC futures the futures contracts for that July 27th meeting. You notice it's now 92% that we have a 75 basis point raise at that meeting in just a couple of weeks. Now, the noteworthy part here is, if you look down here at the bottom, notice that 1 month ago, on June 6th, there was an 85% chance we were going to see a 25 basis point increase. 25. Now it's 0.4. And all of a sudden, the probability is 92% we're going to see 75 basis points. So either the economic data, the projections from the Fed, or whatever the case may be, has really surged and created this kind of fear that we're going to see 75 basis point raise. So that's the big news. We do have a lot of announcements coming out the remainder of this week. As you guys know, we still have some unemployment claims numbers. We had today you had the JOLTS job openings number, which really wasn't that great. JOLTS job openings, it declined, but not as much as expectation. So I guess that's good. But JOLTS job opening is boring, right? It's really not the exciting piece. I think I actually have, was there a job number tomorrow? Let me bring that back up for you. You have unemployment claims tomorrow. You also, on Friday, are going to have ADP non-farm employment change, as well as the actual unemployment rate. To me, that's the most important one. You challenge of job cuts tomorrow as well. So there's a lot of economic data coming out. A lot of it's circulating around jobs. And remember, my feeling is that if we start to see the unemployment data tick up, unless this was kind of to your point, I think you asked some questions that, are we really that concerned about employment? Not yet. I mean, right now, our employment numbers look amazing, right? We are at historic lows with regards to the unemployment rate. I argue that unemployment rate is not accurate. I think we're more in line with the U6 rate, which is putting us roughly around 7% unemployment. Plus, there's a lot of people just aren't looking. There are plenty of jobs out there. They're just some lazy-ass people that don't want to go back to work. I get that. However, if companies start to lay off, which you're already starting to see that, the layoffs have started to surge, then unemployment numbers might start to spike. And I think, my guess is you're going to see the unemployment number on Friday slightly above expectations. Nothing to be shocked about. It's 1 point data. But then the next month we might see it start to tick higher and higher if more companies lay off. That to me is the scary part, because if the job numbers start to increase, unemployment numbers start to increase significantly, then that puts us in the dreaded S word, stagflation. And we'll have to do a special show specifically on that one, I guess, if we get to it. All right, That's going to do it for me. Just because Big Eb is here and Tom left early, I can't do a 1-hour show today. So we'll keep it at 56 minutes. If you guys have comments, questions, feedback, put them down below the YouTube videos. For those of you that did send in questions, I appreciate it. Les, I'll get to your question tomorrow because I have more time. And also for NJ, you asked about rating agencies. I will get to that one as well. If you have something you want me to address on tomorrow's show, since I have no guests or no real timeline for program, just tell me, hey, let's talk about this. Put it down below the YouTube video or whichever YouTube video. Probably this one would be the easiest. Or you can email me, TraderMerlin@gmail.com. That said, hope you guys have a fantastic remainder of your day. I will see you all mañana. Take care.